The European Central Bank maintained an open door for another rate hike, which will be the main attention this week. Also, inflation is easing in the Eurozone, but not as fast as in the US. The EURUSD price closed bearish for the 8th consecutive week, which opened the possibility of a bullish correction this week. However, it might not invalidate the broader downtrend, and a bullish correction toward the 1.095 level might keep the downside possibility intact. In the weekly chart, the price is trading below the 100 SMA, while 2 bearish weeks came below the 20-week EMA. Meanwhile, the momentum indicator moved down but was still in the neutral zone. The RSI remained at the 42.00 level, which is a sign of an active bearish pressure. In the EURUSD daily chart, the current price is developing a downside side, while the 20 EMA is the immediate resistance. Meanwhile, the 100-day SMA is bearish, far above the price, which signals a bullish mean reversion possibility. In the latest bearish swing, the high volume level is above the 50% Fibonacci retracement level, while the current price reached the critical demand zone. Therefore, investors should monitor how the price reacts on the remand zone, as a bearish D1 candle below the 1.063 level could lower the price towards the 1.050 area. On the other hand, an immediate bullish recovery is possible, which may come with strong buying pressure from the demand zone, targeting the 1.095 level.